Hey guys, welcome back to another video. Today I wanted to provide another update on gold. As we called out earlier last week, gold hit between 2060 to 2070 like we predicted, and we came to that conclusion when we drew a Fibonacci retracement from this low here to this high up here. And so when this candlestick retraced to the 61.8 retracement, which is a strong support zone, it also coincided with this long-term daily trend line. So I knew it had an extremely high probability of a bounce because of this confluence, and bounced it did. However, it couldn't quite reach our price target of 2069 like we wanted, and a lot of that has to do with the fact that it ran up against significant resistance. If we switch over to the daily chart, and so this candlestick right here ran up against this 2.0 standard deviation channel resistance to a T. It doesn't look like it now because it moved based on the current price action, but at the time it did hit it to a T, and then obviously this candlestick couldn't break it. So the key thing to do is always take profits when you see any bearish sentiment along the way, and there were quite a few to indicate that. So let's go back over to the hourly chart. If we draw a trend line from this candlestick right here, and we draw another trend line from the same position to right here. Right, so you can see we were breaking down eventually, and ultimately when it broke the second trend line, that should have been a red flag to get out. And then obviously the rest is history with the steep drop. So that brings the question, where do I think gold is heading next for the short term? Well, let's draw another Fibonacci retracement from this high right here to this low from Friday. I believe gold will make its way back to the 61.8 retracement, which is around the 2041 price area. And then that would probably be a good area to short and hold the position to this 1992 price area, which is the 23.6% price target. So to validate this resistance even further, we need a point of confluence, meaning we need two strong indicators to tell us this is a validated heavy area of resistance. So immediately, I see I can draw an hourly trend line from this area and extend it out to the right. So eventually, when the hourly price action comes up to this 2041 price area, it's not only going up against the 61.8% retracement resistance, but also this hourly trend line. Obviously wait for a retest on an even shorter time frame, like the 15-minute or 5-minute before shorting it. Because if it eventually does break this resistance around this price area, resistance then becomes support, and we may think about being long bias again and reassessing where it may go from there. And it could very well still complete the move we called out from last week, which is the 2069 price target. But anyways, that'll do it for this video. If you have any questions, please leave them in the comments down below. Hit that like button if you enjoyed this video, and consider subscribing for more content. Good luck in the markets, and you guys have a great day. Peace.